Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. There are two patterns to note on this daily chart. The first is the big longer term pattern, the shallow bright red July 22 to October 23 bullish shift pitchfork. We're right now either side of the middle tine, currently at 99.90. The lower tine had been tested over the turn of the year and had held. Now it seems the middle tine is being tested. Nearby we have the often previously cited congestion zones and areas. These are between 93.95 to 96.06, and below this the small congestion bands between 91.83 to 92.11, and finally between 86.65 to 86.86. The one we have been working through most recently starts at 97.51 and stretches up to the March 2011 high at 99.95, and prices are now pushing up and out of this congestion area. We now have some fairly free territory topside until about the 10,100 area. The highs and closes from the small double top that we've seen back in late September and early October last year, and then the 2011 high at 10,190, which, and I don't have anything behind this other than my reading of the chart and observations, which we might see some further accumulation stops, buy stops placed above. Okay, so I've discussed the big picture item and immediate vicinity. Now let's look at the more recent action, and specifically this year in the market continues working its way slowly higher within the newer dark blue late December 24 to start of February this year bullish Andrews pitchfork. Even though the outside tines of this pattern have not really been tested, but it does show off the late December 24 to date bullish angle of attack quite well. We're right now in between, well, close to the upper tine, the overhead upper tine, currently at 10,135. That about covers the influences affecting the market. Overall, even now with prices moving still higher, all these actions have led to a mainly sideways market with a very large, very wide range of about 8,800 below to initially about 9,600 area, but now on the wide from 8,800 below to up to about the overhead congestion area 97.51 to 99.95, and then 2011 high, which is now at 10,180. So what should we look out for in the future? Well, please still keep an eye on the dark blue late December 24 to early February 25 bullish Andrews pitchfork. It is the current showrunner for this year right now. Additionally, the bright red middle tine and the congestion areas mainly below, as well as that 2011 high overhead. LME 3-month aluminium. There are a number of patterns here, one within another, all happening at the same time, all affecting the market, and most not working very well, and maybe looking to make them redundant or even retired. One that falls within this category and has been on the brink for all of this year is the very large and often mentioned purple tines of the mid-December 23 to late July 24 bullish Andrews pitchfork. We are at this time below the lower tine, currently at 29.52. 26.92, my apologies. And this after over the course of this year breaching, possibly breaking and fake breaking below the lower tine a large number of times, though seemingly always reverting back up. Though last week and this week, well, it looks like it may be the final straw for this pattern. For the same time period, we also have a bright red, shallowly bullish shift pitchfork. And here we had the recently seen prices starting to establish themselves over the middle tine, currently at 26.28, after pressuring it since at least September last year. But there has been a tenuous hold over it, and today we are just below it again. This pattern will nevertheless still work despite recent actions. In the immediate vicinity, we have the mauve medium moving average, currently 26.16, which has acted as a decent support on a daily and sometimes closing basis since early January, but today is also being once again tested. The green short medium moving average nearby, currently at 26.40, which together with the mauve medium moving average helped support prices over February and early March, now seems to no longer work so well, and it's perhaps now affecting the market more as a nuisance than as anything else. We do have supports further down at the December 21 low at 25.81 and at 25.63, but I would be minded to look to the flatlining long moving average, currently at 25.47, as perhaps a significant support, though in truth I could see any significant move carrying on till the 50% Fibonacci line of December 23 to May 24 move at 24.54. You see, we are also within the previously broken and possibly repaired very shallow dark blue bear channel, currently 24.47 to 26.82. The top side had earlier been breached 5 weeks ago with a short sharp move higher that became a pipe top, with only the one close outside the shallow dark blue bear channel. The recent push up over the last 2 weeks seemed to be a more concerted action and led to another pattern development, which I'll detail shortly. Needless to say, I am not enamored by this dark blue shallow bear channel. Now this leads me to my final recently highlighted pattern, a bright green mid-January to date shallow bull channel, currently 26.29 to 27.65. We are right now this week trying to exit down and out of this pattern, but without much vigor. However, we have a whole load of overhead resistances, notably the continuing resistance of the April 2018 high at 27.18, which still looks good, and the big old 50% Fibonacci line in November 2015 to March 22 move at 27.99 that have capped prices since at least July 2022. LME 3-month lead. The key features in this market, and some of them have been here for a while, all relate to the very large descending triangle, possibly a descending wedge pattern highlighted on my daily chart from early July 24 to early March 25 purple, now broken downtrend, currently at 1996, and below by the bright red early August to late December 24 head and shoulders neckline, currently at 1953, though it could also be the dark blue neckline extension, currently at 1906, of the July 23 to February 24 head and shoulders continuation pattern. 3 weeks ago, prices broke higher out of this pattern. 2 weeks ago, they broke higher still over the nearby gold long moving average, currently at 20.46, and last week peaking at the same level as the December 2024 high at 21.03, before turning lower and making the lesser cousin to the weekly key reversal, the outside week. Prices dropped down as far as the lesser Fibonacci line at 2021, before starting to turn higher this week, moving over the gold long moving average once more. Now, the declining gold long moving average has only been the first real big resistance the market has encountered on its way higher, and we have more overhead, notably the 50% Fibonacci line of the March 20 to March 22 move up at 21.35, which also sits with other congestion between 21.35 to 21.38. Then, apart from the early October 24 high at 21.67, we have a fairly clear area until the 21.85 area, which is a congestion area of lows from early 2022. That all being said, I still laid out 2 weeks ago some opportunities for this break higher, out of the descending triangle come descending wedge pattern. With a primary target X up in the 22.09 area, with a secondary hard to reach target X1 further up in the 23.20 area. There is also the possibility for the action since the start of December last year to date, making a possible ascending scallop pattern. I've been watching out for the scallop handle, and the last 3 sessions from Friday to today fit in with this rather well. However, I will not this week be placing any targets or even potentials topside to this pattern, as to be honest, 3 days are not enough. This will be something to look at and consider next week. Finally, okay, so let me once more temper, if not completely quash your hopes on the top side with my final point, one I've been making all this year and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year should be seen in the shadow of this bearish longer term pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.